So for those of you who don't know me, my name is Alta Colo, and I'm the research manager for the Grid Edge practice at Wood Mackenzie Power and Renewables. So again, just a quick reminder, those of you watching on GTM Squared, those of you in the room, please log on to gtm.cnf.io, ask all of your burning questions, and I will try to incorporate them into our discussion today, right, as much as I can, but of course always find our panelists afterwards. So here today, right now, we're going to talk about integrating DERs into wholesale markets. And just kind of as a show of hands in the room, who's actively following FERC Order 841 right now? All right, a few of you. And how many of you are following the DER proceeding that's kind of been lurking around FERC for a while? All right, so we got one or two hands. So, well, for those of you who are not too familiar with what's going on, we're going to learn a little bit about that today and what we're doing to integrate resources into our markets. So I'm going to let my panelists introduce themselves and ask them, as we have all of this regulatory and market design change taking place, what is it that they would want to be talking about in 2025 if they were sitting here? So, guys, take it away.
Great. So, hi, I'm Peter Mostow. I'm a partner with the law firm Wilson Sonsini. It's a Palo Alto-based law firm. I'm based in Seattle. I'm an energy lawyer. I've been doing this for the last 25 years or so. So 2025 is getting toward the end of my horizon.
Regulatory time, that's like...
I might like to be talking about sailing off on a ship into the sunset. But what we do, and then I guess I'll then answer the question, right?
Yeah.
So what we do is I started this practice about 12 years ago. We have about 35 people, lawyers, working entirely on clean energy and distributed energy resources, energy storage. So this stuff is basically all that we do. About probably over half of our work is on distributed energy resources of one kind or another. We also work for utility scale solar and wind developers. We work primarily for sponsors or for the banks that provide project finance money. Mm-hmm. Sunrun was, in fact, the very first client when we started this practice 12 years ago. They wandered in the door pre-funding, and we've been blessed to work with them ever since. Yeah. In 2025, the non-lawyer answer, that's a little off script for your question, is that I hope that we're all sitting here talking about having once again doubled the amount of wind and solar capacity that's on the grid in the United States. I think we just passed coal, if you saw Acor's press release recently. And we're on a rate now where we could really achieve that. And that would be my main goal. But regarding wholesale access of distributed energy resources, I would love to be talking about having done the first asset-backed securitization for one of our clients where it's a 100-megawatt portfolio of a mixture of solar and storage and demand response behind the meter, and maybe there's a wholesale market hedge in there somewhere, but that the market had become liquid enough that we're starting to be able to really bring lots of institutional money in and deploy these kinds of assets around the country.
Fantastic, the holy grail of virtual power plants. So, Doug, take it away.
Great. Good afternoon, everyone. My name is Doug McMahon. I work for the New York Power Authority. And for those of you who don't know who NYPA is, we are the largest state-owned electric utility in the US. We generate about 20% of New York's electricity demand, over 80% of which is carbon-free. We also own and operate a third of the high-voltage transmission backbone and have about a $300 million revenue energy services business. We predominantly supply electricity and services to C&I customers, state and government-owned buildings, and also 51 municipal and cooperative utilities across the state. We're not a distribution utility, so why is a non-distribution utility guy sitting on a DER panel? Well, we've also committed as part of our support of the state's energy goals to build out 2 new decarbonisation businesses, one of which is focused on EV infrastructure and the other which is focused on building out what we're calling carbon-free flexibility, and that's basically storage, demand response, demand flexibility and the like. And our aim there is not just to advance the state's clean energy goals, but also to de-risk the market for longer-term private sector investment. So I'm kind of looking at it from that perspective in my role. So when I think about 2025 and what this means for DERs and the DER market, I've kind of got three indicators for me which will kind of define success there. So obviously one is a thriving wholesale and distribution marketplace for DERs, where those DERs can operate between both and provide services to both. The second area for me would be great if we're talking about the rise of the aggregator, because that to me is like a really strong indicator that there are sufficient DERs on the grid and that there is economic value to be made by aggregating those resources. And the third, which is a little bit different, is, I guess, is more geared towards making sure that we're taking deliberate decisions around where to site DERs.
Yep.
Ones that kind of take the broader value to the grid into perspective rather than just value to a particular customer or location. Because you want to avoid, I think, overbuilding out capacity of DERs. So I think we've got to take a very deliberate approach to that.
Yeah, I mean, we have overbuilt generation, right, in many territories. So I think that's totally right. And then Ann.
Sure. Hello, I'm Ann Hoskins. I'm the Chief Policy Officer at Sunrun. I'm going to talk in a few minutes a little bit more about some of the work we're doing with DERs and solar plus storage. But in short, we are now the largest distributed residential solar and storage provider in the country. We're operating in 23 states and the District of Columbia and in Puerto Rico. And it's really been very exciting for me. I've only been at Sunrun coming on 3 years. Prior to that, I was a regulator on the Maryland Public Service Commission, and before that, I worked for a utility. But in this 3-year time period, when I arrived at Sunrun and had moved from the East Coast where I had been, I remember having conversations about, people, as we were getting into batteries, we really should be stressing resiliency because that was such a key issue for us at the Maryland Commission as well as my time in New Jersey. And it hadn't been such an issue in California, which obviously that has dramatically changed in the last year and a half with the experience we've had now as a company in entering the Puerto Rico market, as well as the work we are trying to do to demonstrate that we could really be part of a very important part of the solution with the wildfire challenges that we're facing here in California. So it's been a very interesting time and one that has really shown how quickly things can change, in my mind anyway. And so when you ask about 2025, it seems like a ways off now. That's actually like a whole 6 years. And there's a couple of things that jump to mind. One is one of the driving reasons and missions that Sunrun has is to really make a contribution to solving climate change. And in this time period, we've been told we're within 12 years, probably almost 11 now.
Yep.
And so we better be making some serious progress by 2025. I was happy to see in the GTM solar report that came out yesterday, I think there was a prediction that something close to 25% of solar would have batteries attached to it. I think we could be more aggressive on that by 2025, but still that's really interesting considering, again, a couple of years ago, it didn't exist. But the final thing that I really hope is central for all of us by 2025 is that when I look at places like Puerto Rico and California, it's really important that we all figure out how truly to make these distributed resources a central part of the solutions, because it's the only way people in Puerto Rico are really going to have a sustainable system. Rebuilding it the old way, we know has not worked, and I think the same is being shown in parts of California. We have, and it's been really exciting for me the last 2 days to see all these different technology providers and folks with competitive interest in going out and trying to find solutions to be able to support the work of the utilities, and I think we've got to all work together to find a way to make this really happen more quickly.
Yep. Well, that's spot on to what Peter is going to give us an insight into next, right? So we have a few slides for this panel, very few. And so Peter's going to give us an update here on FERC Order 841 and the DR proceeding that's in place, right? Because we did promise a little bit on what's happening with FERC.
A little bit of information. Okay,
Yep.
Sure. Yeah, so based on the number of hands that I saw before to Elta's questions, I guess I'll first start, and there's a great number of kind of international participants here.
Yep.
I'll start by just saying the United States has a fairly strong system of federalism, right? So we have a divided federal and then state government, each of which has lots of powers. In energy, the Federal Energy Regulatory Commission, FERC, has jurisdiction over wholesale rates, wholesale power transactions. But on the theory, shorthand, that's part of the interstate grid, right? So wholesale transactions occur on a grid that's connected across states. So there's interstate commerce going on, so the federal government ought to have some jurisdiction there. So FERC has control, regulatory control over these wholesale markets around the United States. In 2016, FERC started looking, issued a notice of proposed rulemaking regarding two things. One was energy storage and its potential access. Why should energy storage devices not have access to these wholesale markets? Mm-hmm. And they also asked the question, what about aggregations of distributed energy resources? So at a notice of, over the last 3 years, the following things have happened. Try to go fast here. That proceeding has gone on. They had thousands of comments. After a couple of years, FERC finally decided that it should move forward on the energy storage side and that the aggregations of distributed energy resources was a little challenging and complex, both technically and sort of politically. So what they did was they issued this order called Order 841 that told all the regional independent system operators, the grids, the regional interstate grids, to go ahead and figure out ways to give access on a technology agnostic, fair, performance-based metric to energy storage systems, okay? So that's been a very big sort of opener to a lot, that idea is opener to a lot of markets for energy storage providers. There are a lot of opponents to that idea, to that Order 841, and about a year ago was when that order came out, all the opposition started coming. There were a lot of requests for rehearing, which is something FERC can do just to reconsider. They've been in that process until quite recently when they issued an order called 841A that basically affirmed everything that I just said, their original order. And the status of it, and just relating to energy storage, and then I'll get to the DERs in a second. On 841A, we're still within the period when an appeal could be filed, right? So anyone who didn't like it, a lot of co-op utilities were pretty opposed to this. Yep. A lot of state interests and states and state regulators were pretty opposed to this because the FERC order told the states and these regional grids that they must give access to energy storage one way or another, right? They could sort of write the technical rules, but they must give. And so this raised this kind of states' right, don't tell us how to protect our grid. These things are not simple. They might cause risks for the grid, is what the argument was. So there may well be an appeal. There seemed likely to be an appeal. And of course, then that sort of stays the effect of the order until the appeal gets resolved. In the past, FERC's orders have sometimes gone all the way up to the Supreme Court. So the period of stay and legal uncertainty could last for another couple of years. That's sort of a bottom line. Mm-hmm. On the DERs proceeding, instead of issuing an order like Order 841, FERC started these technical conferences. So it started to open a docket saying, please provide us information about how aggregations of DERs could access the wholesale grid. What are the technical challenges and issues that would have to be resolved? They're just wanting to go a little slower. And in that proceeding, we're going to see the same exact issue, probably even stronger, which is this sort of states' rights issue versus the interest in opening competitive performance-based markets instead of giving any kind of technology preference to the legacy technologies that we've been using to provide capacity and ancillary services all these years. The current chair of and the FERC is also a little hamstrung. They only have 4 of the 5 members. The current chair of the commission, and I will then stop, said the following. This is meant to be encouraging to all of you about ultimately we're going to get somewhere on these DERs, on the DERs docket. This is Chair Chatterjee. I believe that enabling participation of distributed energy resource aggregations in wholesale electric markets is important for ensuring just and reasonable rates by promoting competition, so he's getting the competition and the open markets idea in there, as well as spurring innovation and enhancing the reliability and resilience of the built power grid. So there you go, Chair of the FERC.
We're all
supports what you're all
motivated.
doing.
Fantastic. So I think a lot of what we're trying to do here with these FERC proceedings, right, trying to open up markets, a lot of it has to do with opening up this value stack, right? And I think we had a few more slides actually that were supposed to come on for Ann, but let's see where we're at with that. But essentially a lot of what we're trying to do is really open up this value stack that we all talk about, but a lot of it is very complex and very much oriented around, again, the market design and regulation component. So, as we're kind of going down the line here, I'm going to ask Doug to give a pulse on New York for us, right? Because essentially we tend to talk about, what's happening and as kind of a bi-coastal thing, right? It's New York or California. So, and I think because we're in California, it's kind of fantastic that we have Doug here to tell us what's actually happening in New York, right? New York Rev happened in 2014, and now what?
Okay, so yeah, I mean there are two kind of key policy tracks I think that are having a kind of heavy influence over the evolution of the electricity grid in New York. So the first of those is obviously some very ambitious clean energy goals, and I think there's kind of two key goals there. So one is around becoming 100% a decarbonized electricity system by 2040. And then I think we're targeting carbon neutrality by 2050 across the energy system. And within there as well, there are also some specific targets around certain clean technologies. So 6,000 megawatts of distributed solar by 2025 and 3,000 megawatts of storage by 2030. So that starts to give an indication of the direction that the state's kind of taking in terms of the electricity system. And then the second stream, which you mentioned, is kind of REV, this kind of second track. And REV really stands for Reforming the Energy Vision, is really an attempt to establish, I think, a greater role for the decentralized grid in that decarbonized electricity future. And really, it's kind of looking at a couple of things from my perspective. So one is around trying to animate markets and provide market incentives for distributed energy resources and other various activities. But it's also really trying, I believe, to improve what we call like the capacity factor of the grid and see if we can, as we build out a much more renewable grid, see if we can do that in the most kind of efficient way. And it's clear to me that REV is going to, or a form of REV is going to have to play an extremely important part in terms of achieving those clean energy goals. I mean, you can only get so far with bulk scale renewables and bulk scale storage. You, in essence, are going to need these distributed energy resources to provide the necessary balancing and flexibility to the grid in order to fully decarbonize. So New York is endeavoring to start to, I think, play a much more active role in DERs and in storage in particular. It's still early days yet, but it's clear that in order for us to move the electricity grid in the direction that we want to take it, that these are going to be critical areas of investment moving forward.
Right, and I think like a big part of that is, a lot of what I see is that flexibility is kind of a really big part of that, right?
Yeah.
Can you just elaborate a little bit on that and kind of the emphasis, especially I see NYPA putting a big emphasis on that as well.
Yeah, so one area where we've identified this, I think there's going to be a big emerging need is around building that additional flexibility into the grid. So as we build more renewables into the electricity system, that comes with a degree of intermittency and unpredictability on the supply side. So we need a lot of these resources around the state, these flexible resources, to be able to provide that necessary balancing and renewable shaping that will allow us to, the way I look at it, it'll allow us to better match demand to the natural behavior of an increasingly renewable generation mix. And that, to me, is a very different way of thinking about how we plan and operate the grid, because traditionally, obviously, we build generation to meet peak demand. And this way, we're starting to actually think about the demand side a lot more in terms of thinking how we can build out a very efficient, clean energy system in the future.
Yeah. So I'm going to move over to Ann. I know we're supposed to have a few slides, so we're just kind of going to talk through
It's okay.
it.
I'm fine.
in terms of how I think Sunrun is really unique in how you guys are kind of pushing those traditional boundaries, right? Doug kind of gave us a brief overview, but you guys are deep in the weeds in this already, so.
Sure. Yes, you're all saved from a few slides, which I'm sure is heartbreaking. But what I intended to say with them is to, one, just introduce a little bit more what Sunrun is doing for those of you who don't know. I think it's been getting a fair amount of attention. So basically, we started offering batteries probably about 2 years ago, and we've done it in a way that's been very responsive to the specific needs of the states and to the people who we've been dealing with. So the first place we offered batteries was in Hawaii, which is really serving as a source of backup, but also enabling self-supply, and that was in reaction to a regulatory change, which limited the ability of people to use their solar as much because of restrictions on sharing the energy back in the system. And then we came to California, which had implemented time of use rates only for solar customers. And this was really essential for our customers to be able to, again, make use of this valuable investment that they were going to be putting into their homes. And so with storage and what we call our Brightbox product, we are able to deal with this duck curve that people speak so much about, and really not be part of that problem, but instead enable our customers to store up what they create in the middle of the day and either use it themselves during the peak periods later in the day, or share it back and be compensated fairly for that. So that was sort of phase number 2. And then we hit Puerto Rico, where it was a resiliency, reliability problem. People literally did not have electricity, some for up to 9 months. And we were able to go in and offer solar and storage. So in Puerto Rico, every customer who we offer solar to, we also offer with storage, because that is the value proposition. It's not a time of use issue. It's not a regulatory restriction. It is that they really need this as backup. And that's been kind of the way that this has been evolving. We're really excited about New York. That's another key market for us. The work that's being done with REV, some of the incentives that they've put in place from NYSERDA, and now an effort that we're seeing in New York as well as in New England, which is what's being called as bring your own device, which many of you may be familiar with in terms of like thermostats, but we've been working with policymakers to say, let's give customers who want to invest in home storage the same opportunity to essentially respond to a tariff or to an incentive program to meet these local needs. And so what's been very interesting about this is across the country, we have different needs, right? We have different kind of market structures. We have different political goals, whether it's the 100% renewables or a place in the South that maybe not as strong on that, but has concerns about hurricanes. And that's one of the issues that I think it's really important for us all to be very nimble and have the ability to create the technology that will be able to respond to the different kind of structures that, I think as you were mentioning, not only do we have this, federal system, but we have different, multiple ISOs, and then all the different regulatory commissions have different kind of constructs that we follow. And just to touch the last slide of mine was going to be about our participation in New England ISO, which was pretty path-breaking, and we're really excited about it, and we hope that it's just the first for the wholesale markets. But we were able, New England ISO did have flexible enough rules, and we're open to this opportunity to qualify Sunrun to bid into the forward capacity market for 3 years forward, where we are now committed in 3 years to provide 20 megawatts of solar plus storage created capacity. And so over the next 3 years, we will be developing this capacity, just as similar to what a utility or a large generator might do once they've won a bid. And that will take the form of about 5,000 different homes with solar and storage, which we will then aggregate. So all the discussion I've been hearing about aggregation, that's what it's going to be about. We're going to aggregate that, manage that, and be able to respond in this passive demand response, essentially, program, or passive capacity program for New England ISO. And so that we hope is going to demonstrate to the other ISOs out there. I mean, I know New York ISO has some interest. We're doing some work with Cal ISO with their resource adequacy. And, I think it's a time where, there's so many public benefits that can come from finding a way to harnessing this. We think about, again, if you take the California situation where we have these, wildfire challenges now, and customers are being told in the PG&E territory that they could have multiple times this fire season where they're going to lose electricity. What we want to avoid is having customers run out and buy generators, right? Running out and buying generators, one, is completely bad for our environment, bad for all of our climate goals, but also just a waste of a resource, because when you have a battery and our solar systems, we will be able to use it for multiple uses. When you need it for backup, we can shift it to backup for those couple of days. Then it can be shifted back for time of use. And then, we may be able to use it for ancillary services. So the discussions that had been more conceptual recently about stacking are real now. Like, we're at the point now where customers are getting this technology, and we are trying to work with the regulators, as well as the utilities, as well as technology providers, to be as responsive as possible.
Yeah, and I think that's actually a fantastic leeway into what I wanted to ask Doug, is that, there's kind of a certain de-risking of the market that we have to do to get these resources online. And NYPA is very actively involved in this with kind of this changing regulatory environment. So can you just tell us a little bit about what you're doing?
Yeah, and building on what Anne was saying, I think there's an increasing amount of effort going on around actually investing in projects where you are using the outcomes of those to actually inform the regulatory process too. I mean, it's not just a one-way process. So, as part of our $250 million commitment in flexibility over the next kind of 5 years, we're really looking at identifying strategic projects to work on that do that. So don't just focus on optimizing or maximizing the existing value streams that are out there on the customer bill side or in other areas, but also start to kind of test some of these emerging, shall we say, areas, new value streams, dual participation, value stacking, and the like, so that we can learn together with the private sector and demonstrate how these could potentially be replicated, and also use that to hopefully inform the regulators and the decision makers to make sure they're making the right decisions first time. So we're really focusing a lot of our efforts on building out projects that are going to kind of cover that off.
Yeah, and I'm going to ask a follow-up to that, and I think what's really important is kind of the partnership ecosystem in that process too. So can you just talk us through a little bit about that?
Yeah, thank you, Elsa, for mentioning that. So so our intent is to use our patient capital to invest in some of these projects where perhaps the economics don't necessarily pan out as they should do today, and to test how we can bridge the gap between the costs and the various value streams. And really we want to do that in partnership with the private sector, through either co-investment or at least collaboration of various steps in the project development and execution process. So we're working with several of our municipal and cooperative customers to build out some solar and storage projects, which in essence we want to try and aggregate under the same node. And we're going to be working with the private sector to help us build that project out. And we're also looking at other opportunities within our C&I base as well to do exactly the same.
Yeah, and kind of as a last point here, I think that kind of goes in line with what NYPA was trying to do is becoming kind of this digital utility as well, right? Because you're putting all of these assets, but it's also the idea that, the data behind it as well.
Yeah, and that's going to be one of the kind of the complexities, I think, of working out how we orchestrate all these DERs in the most efficient way, right? The data is the kind of, I think, a little bit of the unknown quantity at the moment. NYPA, getting back to the aggregator point, I think we see that as an inevitable bridge between the customer and the wholesale market, and You know, we've invested over the last 2 or 3 years in this platform called New York Energy Manager, which basically captures digitally our customers' energy usage data, and we can analyze that and do other things with that. And I think we see that as a strong foundation from which to start to coordinate and manage these resources in a much more optimal way in the future.
Yeah, fantastic. And Peter, I'm going to throw it to you now, right? Because we all talk about these wonderful distributed energy resources that we want to get online, but my understanding is, and especially kind of on the customer side, you know, especially when talking about energy storage, kind of the legal fees of like structuring, like the financing one of these projects can up the cost by 20 or 30%, which kind of impacts the economics significantly. So can you just kind of talk us through that process a little bit? And is there a way to kind of standardize that in some ways?
Sure, yeah, I'd be happy to. I mean, I get the question of, aren't lawyers a drag on the economy all the time? So I can talk to that.
Look at you, you're so happy over here. What are we talking about?
Yeah, so there are a couple of points about that. Number one, I think we're in an experimental phase, right? So I don't think Sunrun is a great example. Sunrun spent a lot of time 10 or 12 years ago figuring out what does the customer agreement look like and consulting with lawyers about it. Mm-hmm. They do not do that anymore. It's a standardized, the market understands it. It conforms in all the different states where they do business, right? So we move from experimentation towards standardization, and we're in a phase, including with energy storage. I mean, we're not that far into its history of deployment, you know, in the way we're talking about it anyway, putting, you know, like pump storage aside or something with the batteries. So you move toward standardization. I think that we will get there. I think what we need to do first is focus on getting more deployment, and that requires understanding what are the best use cases, what elements of the value stack of different kinds of technology can provide benefits to the grid, figuring out the revenue model for that. And then once there are enough examples, once there are enough instances of it, there is pressure towards standardizing the transaction structure and the paper. Mm-hmm. Right now, absolutely, we're just doing one-off. It's a lot of what we spend our time on, trying to figure out new models, which is fun but really expensive. On this point of sort of the economics of the transactions, I think it's really just important to remember as we look at the technical side, like doing all these experiments on what benefits the grid, what possible risks are there, you know, how do you aggregate, digitization, that at the end of the day, what facilitates the deployment is two things. One, using a utility's low cost of capital, right? So the ratepayers and all that. If you're talking, so that's one, and that's a sort of regulatory compact issue and ensuring that the ratepayers are getting a good deal. The second is if you're talking about third-party owned, so developer-owned technology, that's the project finance market, right? So that the way those developers are not building all this stuff with their own equity, they're accessing money from Wells Fargo or JP Morgan. And to do that, they don't just need a spot market. They don't need they don't just need a wholesale market opportunity. They need long-term contracted revenue, right? Or committed revenue of some kind. And that's the other thing, right? So there's not just technical engineering to what these revenue structures are if we want it to really be able to unlock the value for the grid, but it's also what is the revenue model and the commitment back to the resource that once it's built, it's going to have a place in the market.
Yeah, that's actually kind of a fantastic lead into one of our audience questions, right? So do we believe that locational marginal pricing will continue to underpin wholesale markets with DER proliferation? Wow, end of date today. So that's kind of an interesting one. And I think I would look at that as also looking at the development of local markets, right? And I think, you know, in New York, we have seen this kind of effort to develop this DSP model with these local markets. And I think it always kind of becomes a question as we are increasingly looking at more regulation from FERC as we have to kind of do this. Should we be actually looking at the wholesale market? I think that's another kind of big question to ponder, or should we be considering more local markets with DERs? So maybe, Ann, you can start tackling this one.
You know, I think right now there's multiple opportunities as we're all developing this, and we're going to see which ones have the greatest value. So if you take the New England example, We're excited right now that some of the New England utilities and I think the state of Massachusetts, maybe Rhode Island as well, are allowing bring your own device energy, essentially demand response programs through their traditional energy efficiency construct, which utilities are excited about. And so in the lead up to the 3 years when we need to provide our capacity with solar and batteries, we are actually going to participate in this retail side demand response program. And I think that's what's going to be, there really is going to be a lot of experimentation to see where do you get the most value, how are utilities able to use these resources that third-party providers and customers can provide, or is there greater value if we end up focusing more on the wholesale markets? So I think that the jury is a little bit out in terms of which the values are. I did want to add one thing, though, and just a pitch while we're all here and hopefully sympathetic, is it's really important that we work together to try to extend the investment tax credit. The investment tax credit has really been the driver for so much of this development and for the private at the capital for competitive suppliers. And we're about to reach this phase down period. But right now, the way that it's interpreted, the investment tax credit applies both to the solar investment as well as the storage that is attached to the solar. So it's incentivizing clean solar energy fueling batteries, which is what is harnessing, all of this opportunity that is growing right now. And given, what we heard this morning about how another death knell of the Clean Power Plan, and the fact that we do have this urgent need to act on climate, from Sunrun's perspective, this is not the time to start phasing out the tool that has actually been very effective to get us the private financing that we need to continue making this progress. So, we are certainly going to be working to try to help people understand, given the changes that have happened, we really need to continue making sure there's that flow of capital to keep this going. I'm interested in your take on that, but.
No, I'm actually curious as well, because I think, at what point do we stop subsidizing? And I think from
So there have been a number of discussions with banks recently because, we've had a lot of tax legislation passed. And I agree with you on the, so I think there's a large swaths of the market right now for solar and wind that are competitive without subsidization. But we're talking about all this stuff that's on the innovative side and the things we can still do with solar and wind and the combination of solar and storage together that I think would really be hurt by not having the tax credit, right? I mean, at the margins, it's a huge additional hurdle for anyone developing these kinds of solutions to have to get over.
Yeah, I mean, I'm curious, Doug, on New York's kind of aggressive goals, how is that kind of impacting at least these nascent phases of development?
So, I mean, when we're looking at projects, we are looking at, value to the customer, we're looking at value to the distribution grid, but also value to the wholesale as well. So when we're looking at all the value streams that are out there today, it's clear with some of these emerging DER technologies that I'm seeing a gap in terms of the economics, right? And hopefully you'll see declining cost curves, and you'll start to see a much more robust set of market signals to improve the economics and the value streams as well. But if there's a need for either state or tax credits to play a role in terms of bridging that transition to much greater penetration of DERs, given New York's views around climate change and the fact that we're looking to decarbonize the grid, I think it's an essential part of the solution for now.
Right. Yeah, I think just to add on that again, that if you look at the places where we're seeing solar and storage take off most significantly. It's either because there's been something like a big resiliency problem, like in Puerto Rico, or again, the regulatory restriction in Hawaii. But the other places are all places that have incentive programs in place for storage. It's California SGIP, it's Massachusetts SMART, it's New York with what's going on with NYSERDA. And so, or now some of these creative utility, non-wires alternatives. There's something else that's helping us incentivize this. Yep. And when you look at the research that GTM and others are doing, you see the projections that we're going to have very significant declines in the cost of batteries in the next, if you say, where are we going to be in 2025? Yep. We're going to have hopefully much lower cost storage. And that's exactly the situation where you do want to have targeted incentives. And the thing that's so powerful about the existing incentive is it's a lot easier to extend something than to create a new one, number one. But also, I really think if you're going to incentivize storage, let's do it with connected to a clean energy source, which is solar, or maybe wind, but certainly solar and storage. So there is a need right now. We're not, without those incentives in those states, I don't think you would see the growth that we're seeing. So we've got to continue the political support for that so we can drive that cost curve down.
And just to bring that back to the distribution versus wholesale and where the value is, right? I look at New York's a pretty interesting state from the perspective we've kind of got this tale of two grids. And certainly downstate where there's a lot of the population, there's not a tremendous amount of renewable generation. So and there's a kind of a constrained grid in between. So I see those lower zones in New York State as a huge opportunity for distribution value for DERs. But that's not to say that there won't be wholesale value opportunities too. And really, it's about setting the right market signals that can help dispatchers of those resources to work out what it is they want to, where those resources are best set at the grid at any given time.
Yep.
And that actually is the answer to the question about nodal pricing that we started with, which is that in some places where there's the right context of grid congestion and pockets of available distributed resources and pockets of generating, wind or solar, it will at least change the nodal pricing situation. Whether it does away with nodal pricing or not is another question. On a lot of the United States, just DERs are not going to change the main pinch points out in the grid, on the wholesale interstate grid. And so I think all the stuff we're talking about is probably not going to change the norm of locational marginal pricing, at least not in the early, because just injecting in a lot of DERs in an urban area is not going to fix what's going on out in rural areas where wind and utility scale solar are going on.
Yep, and that's actually one of the questions that came in here, right? It's also, once we get to offshore wind and much higher penetration of grid-scale renewables, will distributed energy resources make economic sense? Or are they a bridge technology that will only exist in local pockets? I have my own thoughts on this, but
I certainly have my own thoughts on it. One, we're trying to avoid this fight that sometimes gets set up between utility scale and distributed because there's a need for both for sure. And I think what was just said about where some of the constraints are differently. But I will say that one of the values of strong values of sourcing energy where it is used is you do save on that transmission expense. You save on the increasingly difficult process of siting transmission. You save on line losses. You save in situations, again, in California, where you have systems that have to be shut down or danger from going through large forested areas. There's a lot of examples of where there are benefits to siting where it is used that aren't always taken, aren't always added in the calculation when you're just comparing, the generation price with each other. And on storage, having that battery, again, at the resident or at the business, you can use it for multiple uses. You can use it for backup. You can use it for time of use. There's multiple uses that you can use, whereas the centralized battery out in the transmission system does not have that same flexibility. So it's just really important that we try to see what the needs are and then recognize the different benefits that are being served, and then you can have, I think, a more fair assessment of what is costly versus benefits.
Doug, final thoughts here?
Yeah, offshore wind is going to have a huge impact on the southern
I agree.
zones in New York, right? So we're still trying, I think, to kind of work out what that's going to mean at the distribution level. But I agree with that. I think, you know, offshore wind is not a dispatchable resource, right? Not in the way that we typically think of generation resources. So there is going to be a need for resources that ideally should be located as close as possible to the points of consumption to help manage the intermittency of those renewables and to really almost complement those, that wind in a way which is going to help us get as much of it to consumers when it's needed the most.
Peter, final thoughts?
I don't think we have the luxury. I think we have to do all of the above. I don't think we have the luxury of waiting for a single technology that sort of solves the problem for us.
I totally agree. And I think we're sort of out of time here, but I'm going to give my final thoughts on this. And I think that there's also an entire societal benefit to the industry that's being created here, kind of around offshore wind, for instance, right? You're creating a whole new workforce here that is kind of a fantastic opportunity because I see kind of our energy transition as kind of, this next wave of industrialization. I think offshore wind, I think one of kind of the most enlightening trips I've ever had was visiting the north of Germany where the whole wind industry is based and kind of the impact societally that it's had there. So, and I kind of hope to see that in like the pockets where we invest in the US as well. So that's my last pitch right there. Thank you guys for being up here. And for you in the audience, please find our panelists and chat with them after. I will stay up here for our final closing roundtable. Thank you.